Let me be very clear with everybody watching this video right now. What is going to transpire this week in the stock market is going to be what drives the entire stock market over the next several months, higher or lower. And I want to show you exactly what's going to transpire this week and exactly what's going on here and why this is a absolutely massive week for the entire stock market. And if you have any money invested in the stock market, whether you're long, short, or anything in between, believe me, there's going to be massive changes this week, essentially, okay? Hope you guys enjoy this as always. And if you're looking to join my private stock group, the private Discord chat, Financial Fortress, check out pinned comment down there. First place I want to start here is the Nasdaq. So the Nasdaq's down almost 11%, okay? Almost 11% this month. This is the last full week of April. Now, very rarely, I've been doing this for 14 years. I know everybody laughs every time I say that because I seem to somehow say it in almost every video. But in all seriousness, in the 14 years I've been in the market, there's very few months where I remember the Nasdaq being down double digits, okay? It's one thing if the Nasdaq's down like 3% in a month, 5%. Even then, you're kind of like, whoa, this is a pretty bad month for the Nasdaq. If you're talking 10% plus, and based upon what's going to transpire this week, it's a real possibility, okay? It's a real possibility that the Nasdaq could finish down not just 10%, but potentially 12, 14, 16% over this month alone, okay? That would be insane. And this isn't like some sort of situation here where we have like a once in 100-year health event that comes out of nowhere, right? Like Rona did, something like that. So if we're talking about the Nasdaq being down 11, 12, 13, 14% in a 1 month basis, and nothing shockingly happened in that month, like that is nothing short of extraordinary. So that's the first reason why this is going to be a very, very important week in the market, okay? Secondly here, you're going to have something interesting happen around Tuesday morning around 4 a.m., okay? And a company named UPS, you guys might know them, United Parcel Service. This company essentially is going to tell us exactly what numbers they just did in the past quarter. But not only that, they're also going to tell us exactly what they expect over the next quarter. Now, if you're talking about a company, the entire stock market, Wall Street, big money looks at for a gauge of how consumer confidence is, how the economy is at the end of the day, look no further than UPS. Now, Wall Street's trying to already give us a signal. This stock is down over 14% just this month alone, all right, over 14%. So Wall Street, sometimes they know stuff before maybe we know stuff. So they're already maybe trying to give a signal here that UPS is going to report maybe either their last quarter was troubling or this upcoming guidance is troubling. Now, if UPS reports great numbers for their last quarter and they have great commentary for the upcoming quarter as well, that is going to give the entire stock market a huge boost of confidence. And I mean massive. If UPS comes out and kills it revenue-wise, EPS-wise, and then on top of that, they say, oh yeah, everything looks great from our angles. Orders coming in looks great. Shipping's very, very strong through April, and we expect a strong next quarter. That would be a massive, and I mean massive, breath of fresh air for this entire stock market, okay? But if that doesn't happen, and if they say, oh boy, those orders just aren't quite coming in, e-commerce is slowing down massively, that's going to be just more trouble for the market and more things to scare the stock market about a recession, right? Which is something that's becoming more and more of a serious subject. It really, really started to amp up in February. And since then, we've heard company after company after company, at least as far as last quarter, give bad guidance or choose to give no guidance. And that was a signal to the market like, oh boy, maybe we could be in for something. And I think that's one of the reasons why the Nasdaq's down so much going into this, S&P 500, Russell, and the Dow Jones as well, but the Nasdaq specifically, right? And so whatever UPS says will ultimately shake the market if for much worse or give the market a breath of fresh air in those earnings. But also Tuesday morning around 5 a.m., Pepsi's reporting earnings. Now, Pepsi's a super boring stock. I mean, put me to sleep, Pepsi, okay? But I can tell you this is one of the few quarters ever that I think everybody should pay attention to Pepsi's numbers and their guidance as well, okay? And the reason being is we all know about massive amounts of inflation going on, okay? And if you want to understand inflation on a greater level, look no further than a massive company that is having trouble growing, okay? And that's Pepsi. Coca-Cola would fit that same category as well. Boring companies that they're not growing, okay? But these sorts of companies, their input costs are very, very important. The plastic for the bottles and, transportation of all the different products. And if inflation's continuing to be a massive hurt to their business model, they're going to tell us that. And if they expect this to get far worse next quarter, they're going to tell us that as well, all right? And the orders they place sometimes are months into advance. So I think a company like Pepsi, if you really want to understand inflation on the highest level possible and kind of where we're going with inflation, look at Pepsi and look at their commentary, listen to their conference call, okay? Tuesday, 1 p.m., we have Google and Microsoft both reporting earnings. Now, Google's, well over $1 trillion market cap. Microsoft's over $2 trillion market cap. So the fact that you have both those companies reporting earnings within a 10-minute span of each other, essentially, it doesn't get bigger than this, okay? It literally doesn't get bigger than these two companies reporting at the same time. Google could have some worrisome commentary around kind of search trends, around, folks maybe even using YouTube a little bit. We'll have to see what happens there. Microsoft is a very stable business model, but we'll have to see what they say as well, right? Now, these stocks are very important to the entire stock market, not just because of their massive market caps, but because of the psychology of like the vibes of the market, okay? And essentially, if you look at Microsoft, we're starting to lose this stock. This had been a stock that's holding up very, very well. Over just the course of this month, this stock is down almost 13% going into these earnings, all right? So this is definitely a troublesome sign. Now, if all of a sudden, when this stock falls 6-7%, all of a sudden we're down 20% now in a month on Microsoft, and that's not good for the market, okay? This next one, even bigger, okay? This next one's even bigger. Google McDougal, we're in jeopardy of going bear market on Google here, okay? And a bear market in a massive, massive way. This is just this month. Just this month, Google's already down over 16%. Google's got to come out and report I would say they don't need to report an A+ quarter to go up. They need to report an A quarter. A quarter and this baby can start coming back. But if they don't come in with a near perfect quarter, this baby's going to fall more. And next thing you know, all of a sudden we're going to be down 20+% in a matter of a month on Google. That would be scary. Okay. And so usually companies like Google are almost seen as recession proof. We'll see how recession proof a company like this is. Okay. That definitely matters, and that will move the entire stock market. If both those, let's say the worst case scenario, okay, worst case scenario for the market Tuesday afternoon is Google disappoints, Microsoft disappoints, both stocks down 5-10%, right? The entire Nasdaq the next day will be down 2 to 3% if that was a scenario. An okay scenario would be one of those goes up, one of those goes down. Maybe Microsoft goes down, Google goes up, or vice versa. Great scenario for the market would be both of them kill it and they kill guidance. They report both A quarters and up, and away we go. But if that doesn't happen, obviously we could be in some real trouble real quickly in regards to that, right? Wednesday, 1 p.m., Meta reports. Meta has been a disaster in terms of its stock price, okay? And honestly, in terms of its numbers. As somebody that's a Meta shareholder, I got to call it the way I see it. And their last quarter was bad. Their guidance was awful. Very disappointing for all of us, Meta bulls. It was a disaster. And that's, now we can make an argument that maybe the stock has shot way too far to the downside, down 45% year to date. 45% year to date, and Meta was already a cheap stock. It's at a 13 PE ratio now. Oh my gosh. I mean, it's incredibly cheap. All right. Meta just needs to come in with something that's not a disaster and the stock's going up. If they come in with another disappointment, oh my gosh, you want to talk about just another devastating thing for this stock? I don't think they're going to come in with another disaster, but you never know. Okay. Now, the thing with Meta is it's not just important for them, but every single small business and mid-sized business, and even large companies nowadays, but especially small and mid-sized companies, they are negatively impacted if Meta's in a tough place at a given time. And if, Meta's advertising growth isn't strong, then that means probably small business and mid-sized businesses aren't strong as well because they're not spending on those platforms. Facebook, Instagram, those platforms, that's where you advertise if you're a small and mid-sized business. That's the best place. There's nowhere you're going to get more bang for your buck than that. I guess anybody that runs a small or mid-sized business, they will tell you just that, especially anything you need to get in front of consumers. But even B2B, it's still a great place because you can do so many search things and whatnot as well. So nonetheless, if you also want to talk about a stock that could potentially move Shopify up or down, look at Meta. So many Shopify stores rely on Facebook for advertising. And so, man, if somehow Meta disappoints again, that would send Shopify down as well, likely. So, I mean, when you're talking about a stock that's down 45% year to date, they just got to come in with something decent, just decent, and we're up. If they come in with disappointment again, oh boy, okay, that would be a sign that, you know, we have issues, not just with Meta, but with the entire stock market, and recession is likely here, okay? PayPal, PYPL, Wednesday, 1 p.m. also. Now, this is a stock that's been a disaster also. Look at this stock, year to date. It's down 56% year to date. Another one is just a disaster. When it comes to PayPal, it's not just, first off, I think PayPal and Meta are both great buys for anybody as a long-term investor. Myself, that's why I'm buying these stocks. I literally just bought some more of these shares. But when it comes to these sorts of stocks, right, it's not just important for those stocks, but it's also important for the entire market. PayPal is a huge company with PayPal service, Venmo service. I mean, you're talking about a company that payments at the end of the day. And so you're going to get a gauge also on the overall economy by somebody like PayPal. And if PayPal's disappointed 2 straight quarters, if they disappoint a third quarter, at some point in time, right? And we talk about if these companies disappoint again, at some point in time, it becomes where it's not that company's fault, it's the economy, okay? And so let's hope that doesn't happen, all right? Let's hope that doesn't happen, because that means our economy's fallen off the rails and we're in for some real trouble in the economy, right? Because like I said, with how many of these companies have been missing numbers and reporting disappointing numbers, if there's enough companies, it's not like a company specific thing. At some point, it's like, damn, man, we're just starting to lose the entire economy. So that's why I say these sorts of companies are not just important for people that care about buying these stocks, right? But it's also in terms of the entire stock market in general, right? Now, Wednesday, 1:30 p.m., around there, Teladoc's reporting, TDoc. Now, this is a stock that's down 80% from its February highs of 2021. It's been awful. Everybody knows that, right? Teladoc, I'm interested to hear what they just are, what type of numbers they put up. Is their growth gone now that the world's kind of gotten back to normal? What's going on with that? It's also a very important stock because this is one of the Cathie Wood's most in biggest investments for the ARK ETF. And so the ARK ETF's been awful. Everybody knows that, okay? And every pretty much stock outside of Tesla that's in the ARK ETF has been a disaster zone. I mean, almost all those stocks are down 50, 60, 70, 80% from their 2021 highs. It's been awful, right? But if you're talking about a break in that trend, it would be a company like Teladoc actually reporting good numbers and getting some life back to that ETF and getting some life back to that stock specifically. So I actually think Teladoc's a really, really important stock for everybody to kind of keep an eye on. That's one of those growth stocks that's just been absolutely devastated. And if this baby falls more, for the short term, there would just be no hope. There was no hope for ARK's ETF if that's the type of scenario, because then you're in a situation that if you lose Tesla, then everything's down, right? And Tesla's been really, really hot because they're a massive amount of back order essentially for them. But if we start losing that baby, ugh. Now, Twitter's reporting Thursday, 5:30 a.m. Everybody's going to be talking about this, right? And the reason being is the whole Elon Musk circus situation over at Twitter, all right? Now, in my opinion, don't really pay attention to whatever's going on at Twitter. Twitter is a mess. And I mean a mess. And it's been a mess for a long time, okay? I think there's something much more important that everybody should be paying attention to. I'm sure this is what everybody's going to be talking about on CNBC and the financial networks and things like that. And this is going to be the big thing. But don't pay attention to that. That's a sideshow circus show, okay? What you should be paying attention to Thursday morning is around 5:30 a.m. Thursday morning, MasterCard is reporting earnings, okay? And like I talked about earlier with UPS, if you want to get a gauge of the entire economy, look at a company like a MasterCard who's running transactions all over the world. And you'll get a very good gauge on what economic activity is looking like, what guidance is looking like. Are they seeing any sort of slowdown or not? Now, MasterCard, Visa, those companies usually trade at pretty rich PEs and forward PEs. Especially considering they're not the strongest growth companies. Look at MasterCard trades at a 40. So, these are sorts of stocks that are at valuation risks, in my opinion. MasterCard and Visa, they're both reporting this week. But like I said, you'll get a good gauge on the economy based upon guidance and any commentary they're going to have to say. It doesn't get much bigger and better than listening to a MasterCard. Thursday, 1 p.m. gets crazy again, okay? Amazon's reporting earnings. Now, Amazon's become so big now. I mean, this is a company that's doing, they're going to be the biggest revenue company in the world within about a year, I would say. They're already very much approaching that. And so when it comes to Amazon, it's gotten to be such a big corporation now between Amazon Web Services, obviously Amazon's e-commerce business everybody knows about, plus the advertising business they've built up into this massive business, and all their other side businesses like Whole Foods. I don't know if you guys know, they own Whole Foods as well. They own Zappos. They own Twitch, right? They own so many different businesses. It's incredible. But when it comes to Amazon, you're going to get a good gauge on the economy. But the thing that's interesting with Amazon, and I just bought my first Amazon stock. I just bought 2 shares in the public account here a few days ago. And the reason being is Amazon's valuation's gotten very, very compelling. I hope this stock falls more. And I'm sorry for the Amazon shareholders out there, but I do hope this stock falls more, because I would love to pick up more shares, even though it's already a great deal. But this is a stock that's been consolidating and just chilling for well over a year and a half now. Well over a year and a half, Amazon stock has done nothing, absolutely nothing. And this is one of those moments where it's like, is this a stock that's finally a breakout, or is this just going to be another disappointing quarter for Amazon? If they come in with another disappointment, a lot of these growth shareholders that are in Amazon are just going to flood out of this stock, right? Because they're going to be like, I can't get any growth here. So this is a very, very important quarter for Amazon overall. They got really tough comps year over year, obviously to comp against. We'll see. At the end of the day, a company like Amazon, and this is very important for everybody watching this to understand this, okay? A company like Amazon, don't confuse whatever happens short term with the long term business model that is Amazon. Amazon is a great company for the long term. Whatever happens in the short term quarter, if they miss numbers and the stock goes down, or they miss guidance or whatever, all that, it ends up not even mattering in the long term. The short term, this stuff is everything for this market, right? And if the stock goes down 5-10%, that's devastating for not just Amazon, but for the entire market. But let's not confuse whatever's going on short term and tough comps year over year with the long term story that is Amazon. That's because a lot of people get very caught up in the short term numbers, and I understand they matter, especially for traders and people that are doing short term stuff. But for 99% of the people watching my channel, you're long term investors. You're thinking about these companies over the next 5 years. And Amazon's story is intact. It's a great value. Anybody that knows how to value stocks knows it's a great value for the next 5 years. And but doesn't mean it can't get cheaper in the short term. That's something we've learned, obviously, in the market this past year. Some of these stocks trading at prices, it's just insane. I own some stocks that are trading now at like $3-4 a share, $2 a share, and it's just like, this stock's really trading at this price. It happens. So for Amazon to go down to 2,600, 2,500, if they reported another disappointing quarter, it's not all around the possibility. And I wouldn't mind it. Next one up here, Apple, Thursday, 1:30 p.m. The king of the stock market, the king of the stock market. There's nobody bigger than Big Dog Apple, $2.64 trillion market cap. This stock alone will move the entire stock market, up or down for that matter. It'll move the semiconductor stocks. It'll move the entire tech sector. I don't know if this is a good sign or a bad sign, 11.11. But this stock essentially, year to date is down 11.11%. Now, when it comes to Apple, this stock has been holding up the market very, very well. But if we lose this baby, it's lights out for the market essentially, right? There's 3 stocks that I've been looking at that are core companies that have really been holding the market together. One's Tesla, just reported another great quarter, A+ quarter. The other's Apple, the other's Nvidia. And if we lose those babies, right, we're in a world of hurt more for the Nasdaq, the S&P 500, and the entire market. So that's obviously very, very key. Thursday after the bell, Robinhood's reporting. And the only reason this is important is just to see how disastrous the numbers are year over year, and that's about it. Robinhood, that's a mess. Obviously, retail traders have left the market. Retail investors have left the market. The stock's gotten so low that maybe it bounces on even bad earnings, but it's just a question of like, how bad will their earnings really be? I think that's the thing to look at, and how bad will their guidance be for next quarter. So, guys, this market is crazy. It's going to be an absolutely epic week in the market overall. And there's a type of week in the market that will ultimately dictate where the stock market goes over the next several months, not just over the next week or so, okay? Because there's so many huge companies that matter so much that are reporting essentially. Let me know what you're planning on doing this week. I would love to hear from you guys as always. Also, if you're looking to join my private Discord chat, Financial Fortress with the 6 and 7 figure members, all those sorts of things, check out the pinned comment down there. Much love and have a great day.